All right, so now there's an Adi Godrej press conference that is happening. Let's go across and listen to what the management has to say.
Anybody has any particular questions? I think the debt equity ratio now is about 1.06 at the end of the quarter, and that has come down from just about 2 at the end of Q3. So there's been a significant reduction in the debt equity.
Do you have any further plans to reduce it? Because analysts say that still it is one of the highest debt equity in the...
No, we've said that we're quite comfortable with the debt equity ratio in the range of 1 to 1.5:1. We think that allows us to both manage our business prudently, but also capture the kind of opportunities that are available. We will continue to look to improve cash flows from operations, from exiting commercial projects, but we don't think our gearing level is at a concerning level at all anymore.
At 1:1 debt equity ratio, the cost of capital, if you look at the weighted average cost of debt and equity, that's ideal.
What's the net debt figures, please?
About 1,500 crores.
Which are the commercial projects you plan to?
We're doing several commercial projects. Most important ones are 2 projects we're doing in Mumbai. One in Vikhroli, a project called Godrej 1, which is a 750,000 square foot A-grade commercial office building, and another one in Bandra Kurla complex in partnership with Jet Airways, which is a 1.2 million square foot office building again in the heart of Bandra Kurla complex. We also have some IT projects in Kolkata, 2 projects, Godrej Waterside and Godrej Genesis, and 1 commercial office project in Chandigarh called Godrej Eternia.
Mr. Pirojsha, analysts say that this BKC project is a little bit of stretch on your balance sheet. Do you have, I would like to hear your views on that, as well as do you have any plans to sell any stake in that project?
It is a more capital intensive project than one of our typical projects. At the same time, it is a very large project in the most desirable commercial location in India. We are very confident that the project will do well. We will of course continue to evaluate opportunities to reduce the capital employed in the project, but we don't have anything firm in place at this stage.
But sir, market rumors are saying that GIC has called up this deal because of the unviability in this project. So, what do you say?
So you discuss private equity and other investment deals with many people, and then of course some fructify and some don't. So that's part of any negotiation and any discussion. Not everything you start discussing ends up successful, and many do.
Can you give us the details of the 2 deals that you've already signed this financial year?
Sure, we've signed 2 residential projects, one in Alipur in Kolkata, which is about 170,000 square foot high-end residential development where we have a 45% revenue sharing agreement. And the second one is a project in Baikala in Mumbai, which is under the development management fee model, where our fee will be 50 crores. We don't have to make any investments for construction or other things, and we also will receive an upside promote if prices in the project go above certain threshold levels.
Have you already plans to introduce 80-20 schemes in Mumbai real estate market or Bangalore real estate market?
No, not for now.
Have you increased any prices in the last quarter?
Yes, we have increased prices in some projects. Notably, our Vikhroli project is doing extremely well, and prices have gone up quite considerably. From an average price for the first tower, which we launched in October, just under 12,000, we are currently at an average price of about 14,000 rupees per square foot. So I think our customers have been quite interested in the story of the Vikhroli development, in the idea of Vikhroli as a strong upcoming destination, and of course in the high quality of Godrej Platinum, which is a project that's currently underway. No, we've sold. We sold out of the first tower that we launched in October within Q3. We launched the second tower, which is about 150,000 square feet, in Q4, actually in the last 2 weeks of Q4, and we sold about a little over half of the total space we launched within that 2 weeks.
So how much space is left? Half of it is left now?
No, we've sold more since then. I don't have the exact data, but we've sold more than 2/3 of the second tower.
But we launched further towers.
Yes. When are those launches likely?
Well, so this individual project has 4 towers. We expect to launch the 3rd tower later this year and then the 4th tower at some point early next year. But of course, this is just one of what we think will be many projects in Vikhroli.
The RBI has reduced the rates now. Do you think buyers, some of them are sitting on the fence for a long time, do you think more and more buyers come to the market and buy properties, especially in Mumbai and NCR?
I think it's certainly helpful. I think interest rates having gone up as much as they did, I think 13 consecutive times over an 18-month period, was one of the major dampening effects on the real estate sector. I think general macroeconomic sentiment not being very strong was another important factor. But yes, certainly interest rates coming down we think will be one of the key drivers for a pickup in demand in residential real estate in particular, which has been quite weak over the last few quarters.
Don't see any scope for developers to reduce prices?
No, I think we get that a lot as a question. I don't think that a meaningful reduction in prices is possible unless the government greatly eases supply constraints. Today it is quite difficult to bring a project to the point where it can be launched. And if you look at developers' input prices for things like steel, cement, labor costs, cost of bricks, sand, everywhere you go there is huge inflation in our input costs. So the ability to reduce prices would erode margins too significantly. Already I think developer margins are under a lot of pressure and have reduced substantially over the last year or two. So I don't think it's likely unless there's a very bad worsening of economic conditions or an easing of supply conditions that prices are likely to come down much.
The only way I see prices coming down is if things like FSI are considerably increased. Without that, I don't see anyone.
Do you see that a lot of policy approvals and the time that is taken for approvals is also hurting the business, because that's one of the major demands that's been recently by MCF like Pirojsha?
Yes, I would say so. And this is pretty much across the country. So proposal clearances are getting more delayed than in the past. Even in the past there were a lot of delays. Unfortunately in our country this is a serious problem. And if this is rectified and if the FSI, what you can build on unit land, is liberalized, that way you can increase the supply and reduce the cost, because then unit land cost is spread over more area. So that is the way forward in my mind for the government to create more housing and at more affordable prices.
Right. Also the new DCA rules, under that a lot of builders have resubmitted their plans, and that has also affected the kind of investment plan that they made for the next fiscal year. Will this also impact Godrej Properties, some of the projects which are ongoing, specifically on the Vikhroli project?
Yeah, actually we think the advent of the new DCR rules is a fantastic development from the company's perspective for a variety of reasons. First of all, the total FSI that you can consume and the total saleable area you have on projects is increasing. So actually on an estimate for our Vikhroli mixed-use project, we think the total area we can develop now is probably 20 to 25% more than we'd initially estimated, which adds a huge amount of value. Of course, this also implies that the total developable area in Vikhroli for our overall land will also increase by about 25%, which is hugely value-adding. Secondly, there's been a creation of an even playing field for all developers. So I think one of the reasons we had a bit of difficulty getting projects in Mumbai 2 or 3 years ago is that different developers would come to the same project with a different set of working assumptions on FSI. Those kind of concerns have been removed, which we think makes us much more competitive in the Mumbai market, which I think we're demonstrating with the number of new deals we've successfully closed in Mumbai in the last few months.
There have announced a couple of redevelopment projects in the past few months. Will the focus continue, and would you look at key partners for such projects in future as well?
I think we've been talking a lot about our redevelopment plans for some time now. It's been a little embarrassing to come to you guys without any firm developments on that space. So I think we have seen now a couple of deals getting closed. We do think that there will be many more deals and opportunities for us in the redevelopment space. So yes, I think Mumbai in particular and the redevelopment space within Mumbai are a key focus for us. And private equity opportunities are something we look at on a case-by-case basis if we get a deal that we think makes sense. we are always open to it, but we're never fixated on that we absolutely must do a private equity deal for a project.
So this financial year would be a more redevelopment focused year in terms of launches?
I think we've signed 2 projects. Both of those we hope to launch this financial year. There are more projects that we hope we'll be able to announce in the coming quarters. But certainly, our non-redevelopment business is also growing very rapidly. We did, as my father mentioned, have 10 new deals in total last year. Only one of those was a redevelopment deal. So I think both sides of the business are doing well, but I think redevelopment has gotten to a stage where we now have quite a bit of traction.
You also got into a new role of development managers.
That's right.
So will that also continue?
Yes, that is another model that we think is quite exciting for us. Both redevelopment and the development management fee model fit very well with Godrej Properties' capital efficient land sourcing strategy, where we don't like to go out and buy land and lock up too much of our capital in the purchase of land. And both the redevelopment space and the development management fee model allow us to do a lot of development without needing to buy the land. They also both leverage to a great extent the strength of the Godrej brand in attracting partners to work with us even without deploying capital. So I think they both make a lot of strategic and financial sense of the company, and yes, these are models we'll continue to look to extend this year.
Alright, so that's the management of Godrej Properties addressing the media on their Q4 numbers. Another company, which is Aditya Birla Group's flagship company, Grasim, reported little over 12%